So we're going to prepare a statement of cash flows for Apparel Inc. And it's for the year ended December 31st, 2020. So you've already written down the income statement that was provided for the same year. And then we have comparative balance sheets. So we have our ending balance as of the end of this year, 12/31/2020. And then we have our beginning balance, what we started the year with at 12/31/2019. For the statement of cash flow, we learned last class is separated into 3 separate categories. So we have operating activities, investing activities, and then financing activities. So we're going to start with the operating activities, and we're using the indirect method to prepare the operating activities section. So the very first line of it underneath the title, obviously, and then operating activities is going to be net income. And I want you to give yourself a little bit of space. We're going to have an inner and an outer column. So I'm going to go over a little bit to the right. And where does net income come from? What financial statement?
The income statement?
The income statement, correct. So I'll just write over here that it's coming from the income statement so you know that. And net income from the income statement was 140. And it's in millions. We don't care about the zeros right now. We're just going to roll them off. So that is the first line when we're using the indirect method. Because what we're going to do is we're going to start with that, which is on an accrual basis. And we're going to convert that number to a cash basis. So basically cash flow from operating activities, from our day-to-day activities. So the next line is going to be adjustments to convert. And this is just a title. Net income to a cash basis. And I'm just going to run over because I ran out of space. Colon. Adjustments to convert net income to a cash basis. So remember how we went through those 3 steps? This is where we're going to write them out. So we're going to move away from the actual statement of cash flow to do some calculations. And remember that the accounts that are impacted for the operating activities are current assets, current liabilities, and anything that's impacting the income statement. So before we get into the balance sheet, we're going to start with step 1. Step 1 is that we're going to add back depreciation. Now, if we look up here, they don't give us depreciation expense in the income statement. That would be too easy, right? Because it's lumped together in our selling and administrative expenses. So we have to use the sister or the account that we also record depreciation in to back into depreciation expense for the period. So we're going to go to the balance sheet and we have accumulated depreciation. The beginning balance as well as the ending balance. So in the balance sheet for accumulated depreciation, we're going to take the beginning balance, which is what we started the year with, 561, and include it in our T account for accumulated depreciation. And at the end of the year, the accumulated depreciation balance was 654. Depreciation expense is a non-cash charge, right? It's spreading out or allocating the cost of the asset over the useful life. So it needs to be added back because it's been subtracted to calculate net income on an accrual basis. We need to read the information above because we need some of that information above to calculate the current period's depreciation expense. So the company sold a store that had an original cost of 15 million and accumulated depreciation of 10 million. The cash proceeds from the sale were 8 million. The gain on the sale was 3 million. Of that information, what do we need to calculate depreciation expense for the period?
Just the accumulated depreciation anyway.
Correct. We need the accumulated depreciation that's been taken on that asset that they sold. So 10 million in depreciation expense needs to be removed from the account. So this is a normal credit balance account. So it increases with a credit. It's a contra asset account, which is why it has a normal credit balance. So when we dispose of the asset, we remove the accumulated depreciation of that asset with a debit, and it reduces the account. What we need to back into is depreciation expense for the period. And we'll take 561, the beginning balance, minus those debits, which is the accumulated depreciation of the asset sold. So 561 minus 10 gives us 551. We're going to compare that to our 654, which is our ending balance. How much is depreciation expense for the period?
Three.
Yep, 103 is correct. So I'm just writing it out if you wanted to use the equation. So depreciation expense for the period is going to be added back. I'm just going to go back to my statement of cash flow and write depreciation expense. And I'm going to use the inner column here, 103. And it's a positive amount because we're adding it back. And this is step 1 right here. For step 2, we're going to go back to the balance sheet because step 2 is looking at changes in our current assets and current liabilities. And depending if they're increasing or decreasing in the type of account they are, we may be adding or subtracting those amounts. So in the balance sheet, we do not need the total lines, so you can actually cross these out. Don't need the net. Don't need total assets. Don't need total current liabilities. But we're going to go through all the current assets and all the current liabilities and calculate whether or not they increased or decreased year over year. So the first one is a special one. It's cash and cash equivalents. We started the year with $29 in cash and cash equivalents. We ended the year with 91. So cash and cash equivalents increased by how much? From 29 to 91.
$62.
62. And I'm just going to box this because we'll use this or we'll see this number later. Accounts receivable went from 654 to 637. So it decreased year over year by how much?
Is it 17?
17. For inventory, we went from 537 to 586. We saw an increase year over year of how much?
49.
49. And we're done with the current assets. Current liabilities, we have 3 accounts. Accounts payable went from 220 to 264. An increase of 44. Accrued liabilities went from 190 to 193, an increase of 3. And then income tax payable, the last current liability, went from 71 to 75, which is an increase of 4. So far, so good?
Yes.
Okay. Now, we're going to go back to our statement of cash flow with this information. And we're going to go in order. So accounts receivable decreased. So we're going to write decrease in accounts receivable. And when accounts receivable decreases, it means we recorded more sales than we actually received in cash, right? Or sorry, opposite of that. We recorded less sales than we received in cash. We collected more from our customers than we actually recorded in sales on an accrual basis. So a decrease in accounts receivable is going to do what?
Increase cash.
Increase cash. So we're going to add a positive $17. Because on a cash basis, we actually collected more than what we reported in revenue for the year. For inventory, we have an increase in inventory. So we're going to write increase in inventory. We purchased more inventory than we expensed, right? Because if we increased inventory, it means that we purchased more than we actually sold during the period. So we need to subtract for that increase in inventory. So we're going to show a negative 49. For accounts payable increase. So increase in accounts payable.
That's a decrease in cash, right?
So if accounts payable increased, it means that you paid less than you actually incurred in expenses because your liability increased. So it's actually going to be an increase in cash. Current assets or assets in general have an inverse relationship. So if our assets increase, then we subtract for that increase. They decrease, we add for those. But liabilities have the same directional. So if accounts payable increase, that means that we have more cash flow available. We didn't spend as much as we recorded in an expense. So we're going to add it. For accrued liabilities, the same. Increase in accrued liabilities. So on an accrual basis, you incurred the expense, but on a cash basis, you actually didn't pay it out. So you had a cash savings of $3. So you're going to add it back. And we're going to do the same with the increase in income tax payable. We incurred the expense but didn't pay it. So 4 is going to be added back. And this is step 2. If you look at a publicly traded company's cash flow statement, it does follow the same pattern. So you'll be looking at the same stuff that you're learning right now. That's why the indirect method is preferred. It's just easy to read and recompute. Step 2 is done, but step 3 is what? What was step 3? Anybody remember? We need to adjust for gains and losses that are recorded in the income statement. They're accrual basis numbers. They're relevant for an accrual basis income statement. But from a cash basis perspective, first of all, it has nothing to do with operating activities. And second of all, it's not cash. It's not cash coming in. It's not cash going out. So there's 2 places we can find that information, either the supplemental information. There was a gain on sale, $3 million, or in the income statement under non-operating items, they disclose the gain. So we're going to write gain on sale of store in the income, or sorry, in the statement of cash flow. And a gain on sale increases your net income. So in order to convert this number to a cash basis, what do we need to do with that gain?
Subtract it out.
Subtract it out. That's correct. So we're going to subtract 3. And I'm going to put a single underline here. And then I'm going to put another underline right next to it in the outer column. And that was step 3. So what you're going to do with the outer column is you're going to add up that inner column or net out that inner column to figure out those changes. So the 103 plus the 17 minus the 49 plus the 44, etc.
Should be positive 119.
Correct. So 119 is the adjustment that we're going to make. And to calculate net cash provided by or used in, provided by means it's going to be a positive number for this activity. Used in means it's a negative number. We're going to take net income 140 plus the 119. Is that going to be a positive amount?
Yes.
How much is it?
259.
259. So net cash provided by, which is what you hope to see, operating activities is 259. No dollar sign, no underline because we're going to use that number later. But in my personal opinion, I think that the operating activities section is one of the hardest. You made it through it. We're going to take a break before we do the investing and financing.
Okay.
So if you need me to, do you want me to leave leave the screen on the cash flow statement or the balance sheet? Doesn't matter?
I mean, we can just use a picture that we took for the balance sheet, right?
Yep.
I mean,
Perfect.
okay, cool.
Okay. See you back at 126, please.
Copy.
So after we complete the operating activities, then we're going to go through the investing activities. So the investing activities has to do with changes in long-term assets. So we're going to go back to the balance sheet after I correct the title.
I don't know if you started recording again.
I did.
Oh, okay, cool.
Yep. But thank you for checking. Okay. So over in the balance sheet, we only have one long-term asset, property, plant, and equipment. We don't want the net because we've already taken care of accumulated depreciation. We want the gross. So we went from 1394 to 1517, which is an increase year over year of how much?
Of 123.
123. So we know that we're not using the gross change. We're going to show cash flow coming in from the sale of property, plant, and equipment, separate from cash flow going out for the purchases of property, plant, and equipment. So we're going to go up above because that's where I fit it in. It's trickier not having a whiteboard for this chapter, not going to lie. And we're going to look at the property, plant, and equipment T account. Remember, this is an asset, so it has a normal debit balance. So the beginning balance, our balance that we start the year with, 12/31/19 balance, was 1394. The ending balance, what we end the year with, was 1517. And we're going to use some of that supplemental information again. So from that first paragraph here, or item number 1, the company sold a store that had an original cost of 15 million and accumulated depreciation of 10. Cash proceeds from the sale were 8. From that information, what do we need for the T account for property, plant, and equipment?
Is it the original cost of the?
Correct. The original cost of the store sold. So cost basis of store sold, this is the amount that we're reducing or taking out of property, plant, equipment. Because if we sell the store, it's no longer asset, right? And we're going to be solving for purchases of property, plant, and equipment. So you can use that formula, beginning balance plus the debits minus the credits equals the ending balance if you want to. Or you can take the T account and use it this way, 1394 minus 15, which is the credit. And then compare that calculation to 1517 back into the purchases of property, plant, and equipment. How much is in purchases did we see?
138.
138. So I'm going to go down to my statement of cash flow again. Property, plant, and equipment additions. And this is going to be an outflow or an inflow of cash.
An outflow?
An outflow. So our assets increased, but we had to pay cash for that increase, right? So it is an outflow of cash. In the inner column, you're going to put brackets around the 138. So what else do we have related to property, plant, and equipment? We have those additions, but we also have cash flow from the sale, right? So we need cash proceeds from the sale of $8 million. So we're going to write proceeds from sale of store. And when we sell something, is that cash coming in or cash going out?
Cash coming in.
Cash coming in. So it's going to be a positive $8 million. Single underline. And then we're going to put the net of this amount in the outer column, but there's not going to be any numbers. I'm sorry, there's not going to be any lines. So 138 in addition, so outflows of 138 and an 8 coming in gives us a net what?
Outflow of 130.
Yep. So a negative 130. Outflow of 130. Net cash, and I'll show it in brackets, used in investing activities. So we had more outflows of cash than inflows of cash for investing activities, which is a healthy sign for the business. They're investing more than they're selling off. And you have outflow of 130. Does that make sense?
Yes.
Wonderful. We're on to our last activity. financing activities. So financing activities has to do with changes in long-term debt specifically related to the principal balance, the amounts borrowed. So issuance of long-term debt or repayments of long-term debt, as well as transactions with shareholders. So long-term debt, we have one, which is bonds payable. Bonds payable went from 520 to 479. So did we see an increase or decrease in bonds payable? Decrease. And what was the amount?
By 41.
41.
Yes.
And then common stock, we went from 155 to 157. An increase of
Two.
And then last one, retained earnings went from 897 to 1009, which was a change of increase of 112. Not doing that one in my head. Okay, so we definitely will need some supplemental information for this section. The company did not issue any new bonds during the year. So that means that the total decrease is related to what?
Paying their long-term debt, paying principal.
So retirement of bonds payable. So we're going to start with that. So if they had taken out additional debt, we wouldn't show it all at once. We would show two separate line items, one for the inflow, one for the outflow. But since they didn't have any additional financing, it's just the retirement of bonds payable. And when we pay off bonds payable, that's a cash flow, which direction? Inflow or outflow?
Outflow.
Outflow. So negative 41 in that inner column. For the next line, we need the supplemental information again. The company did not repurchase any of its own common stock during the year. So there is no treasury stock involved here. The increase in common stock is solely related to what?
Issuing additional stock.
Yep, issuance of common stock. And when we issue common stock, cash is coming in or going out?
Coming in.
Coming in. So positive 2. For retained earnings, it's not so easy. It's not that difficult, but it's not as quick. The company paid a cash dividend during the year. That's important because if it paid a stock dividend, then it would be impacted. So over here, we're going to write retained earnings. And use the T accounts for those. And with retained earnings, we're going to include the beginning balance, which comes from the balance sheet. 897. It's a normal credit balance, so that's why it's on the credit side. The ending balance for retained earnings is what? 1009. Sorry for having to scroll. And retained earnings increases with positive net income. So I'm going to go to the income statement for this information. 140 was net income for the period. And we need to solve for the dividends. Declared during the period.
Should be 28.
Yeah, so 897 plus the 140 compared to 1009, you back into 28. Yep. So if you're using the formula, it's beginning balance minus the debits plus the credits equals your ending balance. So the dividends paid during the period is going to be what? Outflow or inflow?
Outflow.
Outflow, 28. Again, a single underline. And we're going to net these amounts here. Net cash. And is it going to be positive or negative? We have 2 negative numbers and 1 positive number.
Be negative.
It's going to be negative. And how much is it going to be negative by? So go down a space in the outer column. How much was the net cash used in financing activities?
67.
Correct. Okay. And then you will want to put a single underline here. I'm just going to go here because I actually wrote smaller than I usually do. And this next line is net increase or decrease in cash and cash equivalents. So we're going to take, and I'll put the letters next to it so you can see it. You're going to net out the 259, net cash provided by operating activities, net cash used in investing activities, and net cash used in financing activities to calculate the net increase or decrease in cash. So I put sum of. So 259 positive minus 130 minus 67, if you will.
62.
62. And it's positive. So more cash flow coming in than going out. Cash increased year over year. Can I know if I'm correct at this point in time? Yes. So if I go back to my little calculation, remember how I said we would see that again? There's the increase of 62, the balance sheet. So now all we're doing is showing how cash changed. Cash increased by 62 year over year. We started with a beginning cash balance. So beginning balance, if you will, in cash of 29, which is the next line. And at the end of the year, we ended the year with an ending cash balance of 62 plus 29, because they're both positive numbers, 91. So what we're doing is we're saying we're internally consistent. These numbers are the same. They should be the same. This is how we spent and received cash during the year. So the 91 here in the statement of cash flow matches the ending cash balance in the balance sheet. If you're even $1 off in your statement of cash flow, it means the whole thing's wrong. So it is a tricky statement to prepare, but if you go through it step by step, I don't think it's that difficult. On the final, do you have to do the whole statement of cash flow? I don't think so, but you will have to do a portion of it. In your homework, you probably will have to prepare at least one. If you're not an accounting major, you're probably just going to be asked to support the numbers that are in the statement of cash flow. But if you are an accounting major, you're going to want to know this for later classes. So definitely do your homework. That's it. That's all the new content you're going to learn from me in managerial accounting. So you survived. Next class, we'll go over the exam. So if you're not planning on taking the exam, it's been nice having you in the class. I'll miss you.
What's the exam practice? I was like,
You don't have to come. You can come if you want to. If you're going to take the exam, then I definitely think you should. But if you're not going to take the 4th exam, you don't necessarily have to come to next class. But I'm around if you have any questions. It's been my pleasure, you guys. Thank you for coming to class when you could. And have a great holiday if I don't get to see you again.
Happy holiday, everyone.
Happy holidays.
And go through all those practice problems, you guys, or not practice problems, but catch up on any of the assignments. You have until Monday to complete them.
Okay.
Okay. So let me know if you have questions.
Okay, I will. Thank you.
Bye, guys.
I'll see you later. I'll see you Wednesday.
See ya.